Mining Weekly Online is talking to Bushveld Minerals, the CEO, Fortune Mojapelo, and Executive Director, Anthony Fulun. And we want to talk today about the scoping study that you've done with vanadium.
Vanadium is a very interesting commodity with a lot of upside in our view. The economics that our scoping study has shown are very compelling.
There's some big giants in this. There have been, Highveld Steel and Vanadium has been there now, Evraz, and you've got Glencore.
It will produce around about 10,000 tons of vanadium a year. That will account for between 8 and 9% of the world market. Glencore have a near monopoly at this stage on the trade of vanadium products, but there's also a lot of production coming, as you mentioned, through Evraz, and the Chinese vanadium markets is also very buoyant. The thing that stands out about our deposits, as opposed to new projects that are coming online, such as Maracás in Brazil, is the grade. We are very uniquely situated with an extremely high grading vanadium in situ product, and that makes us that's definitely our competitive advantage in the market, is that we'll be able to come to market with a high grading product that's easily and relatively cheaply extractable using existing technologies, and we by nature are very aggressive, and we hope to stamp our authority on the vanadium market in the years to come.
So that's where our project is located, and the pink lines are the magnetite layers associated with the vanadium mineralization. As you can see, that's Rovan, which is the Glencore plant. It's located here, as is Vametco, which is owned by Evraz. Yes. Evraz Highveld is mining at Mapox there, and they've got a steel plant here where they are also producing vanadium slag, and Vanchem is also there. So those are the vanadium producers we've got. But as we were saying, the focus for us is that northern limb, which is a very attractive space because of just the quality and the sheer size of the resource we're talking about. If you look down here, this is a cross section that shows where the outcrop of the MML layer is. Now, that's what we based our scoping study on. But we know, based on assay data we've got and the drilling that's been done, that there's about a 60-meter zone which is mineralized, and the estimates are between 1.5 and 1.7% V2O5 in magnetite or in concentrate form. That already is better than many vanadium or most vanadium projects you'll find around the world. So we're quite excited about that upside potential. We're busy with the mineral resource estimate, and as soon as that's done, that's going to add to the tons of the resource we've got. We did an analysis of our project relative to other vanadium projects around the world. The red is our project. The difference between the three different dots you see is it's a function of whether you're looking at only one layer or two layers, or you're looking at all three layers. But the important point is you want to be on the right side of that curve. In terms of in situ grade, we're absolutely very well placed. In terms of total ore tonnages, which is the size of that bubble, in terms of contained vanadium, this chart says it all for us. You're looking at a world-class vanadium deposit here.
How are you going to fund this mining operation? What is the timetable?
We're looking at about $260 million in capex requirements for the plant. We think that number is achievable. The economics themselves are attractive enough in our view to attract the funding that's required. Given that we're talking an integrated mining and processing play, it fits right squarely in the middle of the government's push for beneficiation with all its benefits. We think that there are local sources of capital that we can tap into. We're obviously going to look beyond that as well, just in terms of the different instruments. But $260 million in the scheme of what we're talking about is a very modest capital requirement. The intention is to complete our pre-feas and feasibility studies within the next 2 years, in time for development over a 2-year period, and start of production in 2019.
Will it be a mixture of equity, or are you going to raise capital on markets, or are you going to go for debt?
It will be a combination of debt and equity. we obviously Bushveld is listed on the London Stock Exchange on the AIM market. We have access to the capital markets. The structure of Bushveld allows us to raise equity in the specific platforms. So we'll look, and as you know, we only set Bushveld Vanadium up as a platform 8 months ago. So we've already rapidly advanced the project. So we'll look from an equity solution specifically within Bushveld Vanadium, but then obviously we'll also look to the debt capital markets. Our sole objective here is to realize a maximum return for our shareholders, so that they can enjoy the benefit of the project from this exciting stage all the way through to production.
Is there a business case for this processing, or would it be better to sell off the ore as it is?
Well, look, the concentrate you make has got about 2% V2O5. That is world class in terms of as concentrates go. It's a fantastic resource. In situ wise, we're talking 1.48% already. Also, we've got a very high grade vanadium resource here. But we think that if you're looking and targeting production of vanadium, when you've got a simple processing flow sheet like we're talking about, which has been established in South Africa, and there's decades of this experience, there is the skills around to develop and implement it. It makes a lot of sense to develop it all the way down to the production of vanadium. We think that that's the best way to actually extract the economics. The operating costs of such an operation come very low. First quartile we're talking about at about $5.99 per kg of V2O5. The revenue that you generate is very attractive. We're looking at operating margins in excess of 50%, and NPV at about 10%, pre-tax $562 million. So it's a robust project, but it's robust because we've taken it on a fully integrated basis, and we're fortunate that we can do that without having to spend massive capex. So you keep the value uplift locally, the benefits for the country are that much bigger, and this is one case also where the benefits for the shareholders and the benefits for the country all are totally in sync. The current price of vanadium is at about $5.60 per pound of V2O5 flakes. We looked at projections from Roskill, which is quite an authority on vanadium, and we also looked at CRU that we have a working relationship with. We took what we consider a conservative case of $7.50 at 2019 as the forecast price, which we then applied throughout the forecast period, throughout the life of mine.
The market gets very excited about lithium as the new sort of wonder metal in terms of batteries, but when compared to the lifespan of a vanadium battery and the various properties that vanadium has, lithium, the typical lithium batteries that are in production today tend to have a lower storage capacity and don't have the much longer term benefits that vanadium has. So we see vanadium as a key driver on the battery side going forward. So, and what's unique, as Fortune's mentioned, is that you've unlike lithium, you don't necessarily have an industrial use for lithium, but with vanadium you've got the fallback of a very robust industrial use, plus you've got the very unique upside of a metal that's only in its infancy in terms of development for battery storage. So we see the vanadium market expanding quite rapidly in the coming years as technology develops.
What's going to drive an even greater growth in vanadium, in our view, is moves firstly in markets like China, where the government has passed policy directives to try and phase out low strength rebar, which doesn't have vanadium, and replace it with high strength rebar, which contains vanadium. So for the same level of steel production or consumption in China, we're going to see an increasing demand for vanadium on the basis of this shift. What's also emerging as very interesting and attractive is the energy storage space. Vanadium batteries, the technology called vanadium redox flow batteries, are particularly well positioned, particularly in the bulk power storage space, where utilities can use them to store significant amounts of power for very long periods of time. Vanadium redox batteries are good because they can connect to the grid without destabilizing the grid. It allows you to store power in low demand periods, which you can use to supplement high demand periods. The result of that is that you can actually put back your capex or your capital expansions of your power generation because you're using the low troughs period. They call it peak shaving. Granted, vanadium is not the only solution in that space, but vanadium batteries are well positioned in terms of their characteristics for storing high capacity power, for being able to charge and discharge continuously for long periods of time. They have a lifespan of 30 plus years. And when they're storing power, they don't lose their charge. They're very quick to respond when called upon by a grid. So when you look at those factors, and then you look at the numbers alone of the energy storage requirements going forward, we think that we will see vanadium play a very big role.
That was Mining Weekly Online, talking to Fortune Majapello and Anthony Viljoen of Bushveld Minerals.